Neo announced some changes to their product offerings coming on August 1st, and we were lucky enough to get an early look to see what they had brewing. We'll start by taking a look at their new premium credit card, before jumping into its most interesting and arguably most controversial feature, the tiered earn rates. I'll show you guys some math I did to see how much you expect to earn from their card every year, and I also did compare to some other credit card offerings from Canada's big 5 banks to see how it stacks up. We'll also spend some time going over other changes Neo is making to their product offerings before giving our thoughts on if we think this is the future of banking in Canada. Before we get started, I just want to mention for transparency that even though Neo did give us an early look at this card and some of the other changes they're making to their products, they didn't tell us to make a review about it, and they have no control on what we say in our review. Neo has taken the opportunity to expand to the premium segment of credit cards, now offering a world-leading Mastercard that is advertised to earn, and I quote directly from the media kit here, the highest gas and grocery cashback rates in Canada. I'll admit, this is quite a bold claim, as there's a bunch of cashback cards in Canada that are really strong. We'll take a look at this claim in just a second, but before that, I just want to mention that this card comes with a standard fare of World Elite Mastercard privileges. This includes insurance in the form of extended warranty, as well as purchase protection, and travel coverage like car rental insurance, as well as some coverage on your hotels and flights. If you use this card to pay, you can breathe a little bit easier when you're on vacation, and believe me, it comes in pretty handy. I take about one trip a year that goes horribly wrong, and I'm really glad to have travel insurance, whether it's through an Aeroplan co-branded card, or maybe an Amex Platinum or something else, just something I know I can breathe a little bit easier, and in case things do end up going wrong, I can just bill it to the insurance and I don't have to pay for it out of my own pocket. Lounges within the Dragon Pass network are pretty solid. They're a nice place to relax from the hustle and bustle of the terminal, but in my opinion, they're nothing to really write home about. I'm making this assumption because all other worldly MasterCards have this, but when I reached out to Neo specifically to ask them to confirm if it had it or not, they didn't get back to me, and by the time we post this video, they haven't gotten back to us either, so if this changes, we'll just let you know in the description below. As of right now, the card also doesn't come with a bonus, which is quite unfortunate because all the other major cashback cards in this segment do end up having a bonus in some form or another. Neo is instead betting that the earn rates on this card make up for the fact that there is no bonus attached, so without further ado, let's dive right into those. As a quick refresher, an earn rate on a credit card is how much you earn on your card in points or cash back on your day-to-day spend. For example, a 1% earn rate on groceries, which means you earn $1 back for every $100 you spent at a grocery store. Neo has advertised earn rates of up to 5% at grocery stores and at gas stations, as well as up to 2% everywhere else. On first glance, this seems fantastic. That 5% would lead the class compared to all other cashback cards by a decent chunk, and that 2% earn rate is also really good on everything else, because if you have some transactions that don't fit into another bucket, like for example things at Costco or Amazon, you'll earn 2% on those instead of 1.5 or 1%, which is a huge increase. In addition, you also get elevated earn rates at Neo's other partners, which is something you won't really see with any other card. When we take a closer look at what up to means, is when we get a bit of a surprise. Neo has decided to go against the grain here and make tiered earn rates for this card, with the tiers representing how much money you keep in their everyday checking account. The general idea here is that the more you keep in their checking account, the higher the earn rate you get. For example, if you have $0 in that checking account, you're going to earn 2% cash back on gas and groceries and 1% everywhere else, a far cry from that advertised up to 5% earn rate. Now on the other hand, if you lock up a whopping $10,000 in their checking account, you're going to get 5% back on gas and groceries, as well as 2% everywhere else. Now this got us thinking, does the math really math to keep $10,000 locked away in this checking account, or instead it's much better for you to just put it in a savings account or just in the market somewhere else? I broke open Excel to check, which I've linked in the description below, so if you want to follow along, you can go do that. And this is kind of what I found. If you spend the maximum allowed on all the categories at their elevated earn rates, so $10,000 on gas, $6,000 on grocery, and $24,000 everywhere else, you're going to earn a whopping $1,280 of cash back. You'll also earn $10 in interest for that $10,000 you have locked up in that checking account, earning you 0.1%, which could give you the total value of $1,290. Now instead, if you take those $10,000 and just put it in a savings account earning you 5%, you're going to earn $560 in cash back and $511 in interest for a total value of $1,071. So in this case, keeping that $10,000 locked away actually earns you $219 more in value over the course of a year. Now if you haven't noticed though, there's two problems with this. First, most people don't have $10,000 lying around they can just put into a checking account or a savings account to get them slightly better earn rates on their credit card. But even if we look past that, the maximum spend cap on gas is just absolutely insane. The average Canadian spends about $250 a month on gas, so about $3,000 a year, which is $7,000 less. So we recalculated with this change, and the numbers shift dramatically. If you keep that $10,000 in that checking account, you earn $930 of cash back, and that same $10 of interest. Now if you choose to put that $10,000 into a savings account instead, earning you 5%, you earn $420 in cash back and $511 in interest. You get a total here of $931, which is just $9 less from what you'd earn by just putting that $10,000 into a checking account. We also just did the math for the other tiers, so feel free to just pause the video right now and you can check it all out. Now technically, the math is on your side for keeping the money in a checking account over the course of a year. But you really have to take a step back here and think, do I need $10,000 of dry powder staking around? Of course, everybody is at different stages of their life and needs different amounts of cash sitting around in an emergency fund, in a checking account, or a savings account. If you're in your 20s and have been able to save $10,000 over just working really hard, you really have to take a step back and think, do I want to put this in a checking or a savings account, or maybe I'll invest in the market instead in an index fund and earn the market return, which is about 8 or 9%. You can leave a few $1,000s laying around in a savings account, but while investing the rest in the market and getting a much better return on your money. The flip side of this comes when you're 40 and have kids, where keeping $10,000 laying around in a checking account or a savings account is actually not the worst thing to do. We really want to stress here that everybody is completely different, and you have to look at your own situation to see if it makes sense to keep money laying around like this, or perhaps investing in a different way, or just doing anything else with your money. Everyone is totally different, and you just have to look at your own situation, not really compare it to others, and see how they're doing it. Now don't worry if you don't even have $10,000 sticking around to invest in a checking account or keep locked away, as almost every single other card on the market has no requirement to keep money locked away to get the best earn rates possible. The Scotiabank Momentum Visa Infinite, for example, earns 4% back at grocery stores, as well as on recurring bill payments and subscriptions, with 2% back at gas stations and 1% everywhere else. If you spend the same amount on both that and a Neo Worldly Mastercard, you're actually going to come out ahead, as you're going to get $540 of cash back with the Scotia and just $420 with the Neo. You'll also only pay a $120 annual fee on the Scotia card compared to the $150 the Neo card is charging, so that's another thing to really take a look at. CIBC and TD also have cards that have strong earn rates that would outdo the Neo on its own if you don't keep that $10,000 locked away. Perks for all of these cards are pretty comparable, so don't feel like the Neo is jumping leaps and bounds ahead, and that's the reason you should get it. Now, that's not all Neo is changing. They've actually tweaked most of their product suite. Both the free Neo Mastercard and the debit card that comes with their checking account also now use the tiered earn rates. We actually see this as a positive if you are keeping your money with Neo, as you're going to earn much more return on what you're spending. On the flip side of this though, the base earn rate of 0.5% is being taken away from the Neo Everyday account, which we don't think is a big deal, especially because you're getting better earn rates across the board, but that's just something to consider again. What's a much bigger deal is the interest rate this account pays is taking a huge haircut. You're now earning 90% less, as it's earning you 0.1% on your money compared to the 1% it earned before. This is likely due to Neo knowing that they don't have to incentivize people to keep money in their checking account anymore, as people are going to do it anyways to just get the better earn rate on their credit card, so there's no reason to pay 1% instead of just 0.1%, as they're just making free money there. Other changes are coming for those who use perks on their Neo cards. The monthly fee for the premium membership, which just gives you a bunch of perks like boosted earn rates on dining and on ride sharing, as well as a couple of other things like purchase protection that the card itself lacks, is now taking a 100% increase from $4.99 to $9.99. I would once again do the math to see if it still makes sense to continue to pay this. Now the travel perk is also seeing a rate increase from $4.99 a month up to $7.99. I honestly didn't think this was stellar value to begin with, and it's getting even worse. With this perk, you get travel insurance, as well as smart delay, which gives you lounge access if your flight is delayed by over an hour, but now for $100 a year pretty much. The good thing though is that you don't have to keep this perk for the entire year. You can just keep it around for the months that you know you're going to be traveling a whole lot, so if you do a lot of summer travel, it may make sense to just pay for those 3 or 4 months. Let me know if you guys are getting any value from these perks, as I personally don't use them, but I'd be happy to eat my words if you guys think that these are a really good deal and you find solid value out of them every single time. The final major change we're going to report is the addition of a $5 monthly fee for the Neo secured card. If you're a new customer, this is going to start on August 1st, but if you've had the card before, it'll start on September 1st, but gives you a month to really think about it. This is pretty disappointing, as one of the best things about Neo was the fact that you didn't have to pay to get a secured credit card and rebuild your credit, but now this is changing and you need to pay $60 a year for that privilege. Now for the final part of the video, do we think what Neo is doing right now is the future of banking? Honestly, I gave this a lot of thought. I really took some time to see what Neo's strategy was, what I think the next few years are going to look like, and what I think they can do. And at the end of the day, I realized that whether we like it or not, I think this is what the future of banking looks like in Canada. I think this is a classic example of the ecosystem effect, where every incremental product you add from a certain company makes all those products work even better in conjunction. With the way the world is moving, it's a matter of time until it hit banking. As a bit of a tech head myself, I'll use technology to really illustrate this thought. You see this all the time with companies like Apple and Samsung, who've created this ecosystem which really incentivizes you to add more and more products to make all your other products work better, and you do end up paying a premium for all these products. This is not to say that all these products are definitely the best products in isolation. I'd go out on a limb to say that these Sony wireless earbuds are probably better than AirPods in almost every single way, except they're not made by Apple, so they don't have that W1 chip and they can't connect directly. Now, while Neo is the first to do this for earn rates, let's not forget that RBC did this years ago with their checking accounts. If you had a mortgage, a credit card, or an investment account with RBC, you saved on the monthly fee for your checking account. Honestly, I would not be surprised at all if Neo decides to expand this further over the coming months and years, with them perhaps giving you lower annual fees on your credit card, or getting more products with them, or perhaps even giving you a higher earn rate than that 5% that exists right now. The opportunities are really endless here for Neo to continue to suck you into their ecosystem as they release more and more product offerings. My take here is that other banks are going to be keeping a really close eye on what Neo is doing and if it's actually making a difference. If they feel like people are moving over to Neo because they're getting better earn rates, I wouldn't be really surprised if someone like RBC comes out and says, if you keep $5,000 in your checking account, we'll give you maybe 2x Avion instead of 1.5x. One thing I really want Neo to add to their product offerings is a co-branded card with Porter. In fact, if Neo isn't doing it, can somebody else please do this already? I've loved my experience flying Porter, and I think it would make so much sense for both these companies to come together and make a product that I think everyone would really enjoy. If you do intend on picking up any Neo products, feel free to use the links we have in the description below. With that, thanks once again for watching. If you guys enjoyed, be sure to hit subscribe, and we'll see you next week. Take care.